So we are back with the MacBook camera. I heard you, I heard you guys complaints about the audio yesterday, so y'all didn't listen back to it. So yeah, from going forward, definitely gonna be putting more time and effort into that. But yeah, so today's video is definitely more interesting. We're definitely we're finally starting to get more into the trading side of things. So all right, so I just wanna I haven't uploaded a trade recap in a little bit, and that's intentionally. But so especially recently, right? We're trying to develop, our trading model. We're trying to make, refine and develop our trading model. So it's like, consistent, has consistent entries, has consistent, profitability. So that's our main goal right now. And as of lately, if you follow me on Instagram, you've definitely seen it. But yeah, I mean, even with like today's price action, I mean, you guys can, if you guys were on, the Nasdaq charts today, you probably know. But yeah, today's price action was not very popular. But surprisingly, with my personal model, I actually did find a couple good entries. I didn't take them, but I did find some good entries today that I could have taken, we could have taken. So yeah, so that's really the point of today's video, to refine the trading model, actually have a defined trading plan, and then be able to implement that going forward. So this morning, I there was a 3 minute order block on NQ right after the dump happened, and a little bit before news. I want to say it was a 9:51 candle. 3 minute candles are a little weird, but the 9:51 candle retraced back into the order block that formed right after the they dumped right at right before open. So using that order block, what I generally like to do when I'm trading is I will look for either an order block fair value gap, or I will look for an inversion fair value gap. So I look for one of those three, confluences, and I want to see a retrace into it, and I want to see price tap consequent encroachment, which is the midpoint of either an order block, a fair value gap, or an inversion fair value gap. So I usually want to enter from that midpoint because I get a better risk reward. So even if the trade doesn't go in my direction, I get a super tight stop loss, and it makes my risk reward incredible. Like I'm getting 1 to 5, 1 to 10, 1 to I'm getting crazy bottom ticks, and I'm getting crazy risk rewards, because if you're setting your stop loss below the fair value gap, let me like slow down. If you're setting your stop loss below the fair value gap, and you're entering from the midpoint of the fair value gap, instead of waiting for price to retrace over, and if you can understand which fair value gaps, or which order blocks, or which inversion fair value gaps to be taking trades from, and you can understand the difference between taking a trade in the direction of your bias and a high probability gap, then you can afford to take trades from the middle of these ranges, because you are waiting for a retracement, a clean, solid retracement into these zones, of high probability retracement that you can take trades from. So today we were waiting for the order block. We see the order block on the 3 minute. We price cleanly reacts off of it. Price came up, retraced back into it, cleanly reacted, respected consequent encroachment, and we could have taken a trade from consequent encroachment, targeting uh, midnight open highs and previous session highs, which would have actually been banger trade. That was like 200 points actually if I were to take that trade. So yeah, so that's what we're basing our model off of. So consequent encroachment CE, then either an inversion fair value gap in the direction of our bias, or an order block in the direction of our bias, so we can get a high risk reward trade, because we want to be taking those trades from the bottom, so we can bottom tick and get those high risk reward, low risk trades, so that even if we do get stopped out, we're not getting stopped out for a large amount of points or ticks, or however. Yeah, so that's the basis of my personal trading model. That is how I trade. And part of that is just actually having the confidence to enter a trade, setting your stops a couple points below the bottom of the fair value gap, or the order block, or the inversion fair value gap, and then actually entering those trades. So now that we have that out of the way, that is basically my trading model explained, and that is exactly what we want to be doing. So we have that done. So now, what times do we want to be trading? I personally, right, my model, I trade it during New York session open. So from 9:30 to 11 o'clock a.m. New York time. And that's, that's what works best for my model. That's what's worked best in, my back testing. So that's the general times I want to trade. I will sometimes, on occasion, take trades from like 8:30 to 9:30 if I see a good entry that I'm willing to enter. But generally, I probably want to be doing better with this in the future. But I do generally only take trades following New York session open, and then only until 11 o'clock. So I saw another good entry later on in the day. 3 minute inversion fair value gap. We got, clean inversion, price retraced into it, respect the consequent encroachment. Could have entered from there, didn't want to. I had class today, so couldn't really trade too much today. The first one I could have taken, but yeah, this one, I just wanted to see how the trade would have played out. Would have hit full take profit. We had a good risk to reward, did not get stopped out. So I probably will be going into more, chart based analysis of my strategy later on if you guys want to see that. But yeah, so what did we go over today? And what did I go over today? This is for me. This is for you guys. This is so we can get better as traders. This is so I can get better as a trader. This is so you can get better as a trader. So we want to wait for an inversion fair value gap, or an order block. Some type of, high probability zone, area of retracement that we can take our entry from. We want to see a sweep of previous liquidity, or we want to develop a clear daily bias that we can take a trade in that direction. We do not want to be trading in the opposite direction of our daily bias. If we are bullish on the day, then we want to take long trades. If we are bearish on the day, we want to take short trades. So if we are bullish and we see a bearish inversion fair value gap, we do not want to take that trade because it's in the opposite direction of our bias, and we do not take trades in the opposite direction of our daily bias. So what did we go over? Inversion fair value gap, order block. We want to wait for price to retrace into consequent encroachment so that we can get a good risk to reward entry. So we wait for price to reach into consequent encroachment, take the trade from there, set our stop below the low of the fair value gap or below the previous low of the order block. So we want to set the low, our stop loss, below the lowest wick of the candle that formed the order block, or we want to set it below the previous low that formed the fair value gap. So if there's a 3 candle pattern right here, like boom, 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 we want to set it below this first candle's lowest wick. If it's in the opposite direction, obviously the highest candle's highest wick. So then we can get, if we're entering from the middle, we're getting those high risk to reward, very tight stop loss, very high, RR. And then we're only trading New York session open to 11 o'clock. And then if we see a trade, we are going to, make sure it, aligns with our rules, aligns with our daily bias. And yeah, so I will definitely be keeping you guys updated on, how my trading system personally is going to be, working in the future. But that's basically my trading model explained right now. And then yeah, so I mean, if you guys want to hear more about that, I can definitely do more videos on just specific concepts, or my whole trading model as a whole. That's crazy to say, like maybe in like a year I'll be like trying to sell it or something. No, I'm just kidding. I'm not a course seller. I'm not in Miami yet, so yeah. But with that, day 3 is over. We'll see you guys tomorrow on the next one. This one definitely came out a little bit later than I hoped, but with class and everything, it's a little complicated. But yeah, we got through today, day 3 of Project 1%. Win rate is still 100% for the month, so not mad about that. Win trade today. Yeah, so that's it for me. Love you guys. See you tomorrow. And, let me know what you guys want to see next.